Before I start today's daily analysis, I want to say that I am going to be launching a subscription for the channel this weekend. I'm going to be releasing content that is only available to those who have the subscription, and it's going to include weekly and monthly charts of stock indexes, gold and Bitcoin futures, and in-depth GameStop and AMC analysis. I'm also going to be including my personal investment and how I'm handling it. In addition to that, I want to start doing lives as well. I'm not sure how that's going to work, but that is to be determined. For now, let's go ahead and get started with the charts. Today, we didn't get a big red or a small green, and that's what I was thinking we would get. I was thinking more than anything else, though, that today's price action would reflect the confirmed Q1 GDP data, and it was just like, yeah, GDP is what we thought it was, right? You know, it's bad, whatever. Nothing too spectacular. Markets were red today, and we almost got a doji on SPY, not quite, just a short black candle, really. And on IWM, we seem to have gotten a hammer. It's not truly a hammer due to the proportion of the tail versus the body. They're too equal. This might be tempting to think that this could reverse and push higher, but I doubt it will. Although the price did close above the critical level I was talking about yesterday. I said that SPY needs to close below the high of this candle at 376 to be bearish for SPY, and we closed above it. Came down and touched the top of this candle. So I don't know if that really is a bearish sign or not. On IWM, I said we needed to close below 170, and the price did push below, but closed above. Very interesting. You know, typically I have a pretty good idea of which way the price is going, but at this moment in time, I think that tomorrow is going to be a signal day. That is to say that tomorrow's price action is probably going to point to which way the price is going to go for the foreseeable week or two. We either need a new intermediate high or a new lower low. I am bearish still, and I'm going to be looking for that lower low. The VIX, the fear index, was high today and came down. It is weird to see a red day on VIX and a red day on the big ETFs, SPY and IWM. This makes me think that perhaps VIX is reversing and IWM and SPY are getting ready to dump. Absolutely dump. AMC did have a green day today, and I was expecting to see more downside, but this doesn't quite look as bearish as I thought. Let's go ahead and hop into the intraday charts and see what we see there. I guess I have IWM up, so let's just have a look at this. The pattern's becoming clear now. It was really hard to tell what was going on with all the gaps that were happening, and the price action was just so erratic. There was this big push higher, and then this grindy sideways sort of a deal before another dive. But I think now what I'm looking at are reverse triangles, reverse diagonal triangles. And it's weird. I'm not really sure what to make of this. Typically, when you see a broadening pattern like this, it is corrective, and typically I would expect this to break down and out and reach towards the start of the pattern. So in Bulkowski chart pattern analysis, this would be an ascending broadening wedge, and I think it's ending with a measured move down. So we have the initial push down, a corrective wave, and then we're going to be looking for a second move lower, and whether or not we get the full height or half of the height is going to signal whether or not we get a bullish reversal or a bearish continuation at the bottom. So that would bring us to about that last low we set, that last major low, towards 160. I think it was truly towards 163 more than 160, but you can see that with my cursor here, if the measured move down does make a full second leg, that it will lead to a new major low, and that is what I'm looking for. I'm looking for the price to come down, make one more new major low, not a whole lot lower than the first one, but a new major low, and then reverse. And that's when I expect the everything rally to start. And I call it the everything rally because I really think that in the next corrective bounce, next corrective run, it's going to be a huge run. It's going to lead us up to near all-time highs, and I think everything is going to rally all at once. It'll be fantastic. But I think we still have this downside to do before we get there, and this measured move down would fit the bill. Since I started with SPY, let's go to IWM, or I started with IWM, let's go to SPY. It's the same story. These two ETFs, they just move together. Just big money moving around. And on this chart, it's a little different. I wasn't sure if the ascending broadening wedge should include the absolute dip, or if I should not worry about trying to catch this intermediate low. It was hard to tell, because if I do include the dip, then I have to make that my ascending broadening wedge, and that doesn't fit very well. And this doesn't look like a bearish breakout yet. So the best thing I could do was to include the that intermediate low. Can I grab this? Thank you. And then pull my lower trend line to meet the open of this candle right here, the low of this opening candle. And that is how I came up with this pattern. And you can see that the price has traveled all the way across and is now finding support. And again, I'm looking for a measured move down. This is why I'm saying it's a signal day, because we are at the bottom of this pattern. If we open with a dump, that would signal a breakout, and the price target for this pattern is the beginning of the pattern, which is the low, the new low. And you can see that a measured move down, if we get that second leg of equal height, it would bring us right about to that same level towards 365. And that could happen in a single day. Big, long, scary day. And then that would be the low. That would be cool. That'd be cool, because then we'd have a nice double bottom starting to form, and that would give us a way to fill up these bearish gaps and prepare to launch higher and fill some of these other gaps that still haven't been filled yet. Like back here, just around that $400 price range, we have a gap to fill still. So I'm thinking for now, it's bearish. We go down, and it could be fast and quick and severe. So Thursday and Friday could be really, really big red days, or maybe the difference between that run split between the 2 days. Regardless, if we do see a green day tomorrow, I'm expecting a bearish partial rise to form before we go down further. I would really rather just see the price tank, the markets go down. The longer you spend these corrective phases, the harder they are to dig yourself out of. Well, not yourself, but the longer they last, the longer it takes to break them. And the breakout, it often suffers due to the length of the corrective phase. So I'm hoping that we don't get this partial rise, that we just dump. In the event that we do just start a reversal and we are green, that's still bearish, I think, because there's still overhead resistance to break here. And if that is going to be our move up and higher, this is going to be the fifth wave of a 5-wave motive wave form. You have a push higher, consolidation, push higher, consolidation, or I should say correction, right? So 1, 2, 3, or 1, 2, 3, 4. And then I guess, is this also 4, this dip? This must be 4. 1, 2, 3 goes to the top, 4 comes down, and then 5 would be trying to push up towards that downtrend. But if this run for 5 is going to be proportional to the size of wave 1, then it's going to be actually form a double top. It'll be a truncated fifth. It'd be very hard to get a 5-wave extension to break out and up above this in a bullish way, which is why I think that really what's best for long term is that the price just collapse. Just collapse. Lean into it, relax, and just find that low so that we can start moving higher. Stop dragging this out. I really don't know which way the prices are going to go tomorrow, but I am bearish. I was looking at GameStop, and I started doing some more in-depth analysis here, and I noticed that we probably started a 5-wave motive form when we hit this downtrend and rejected off of it. And so I have that shown here as sub-minuet waves 1, 2, 3, 4, 5, and minuet waves 1, 2, and we're working on that third minuet wave now. And I'm thinking that this low is probably not the extent of wave 3. I think that we're probably starting a sub-minuet wave 1, 2, looking for sub-minuet wave 3 to take us lower. And that's because this third sub-minuet wave shouldn't be the shortest wave. And I'm thinking if we do have more downside, wave 5 is going to need to be longer, or at least proportional to leg 1. And that would make wave 3 the shortest, and that can't be. So I'm thinking that wave 3 is probably going to extend much lower, and we're going to come in for a double bottom later. That is to say, I think we're in a measured move down, and we probably just started the corrective phase. I think that if I were to say it's hard to break this into a measured move down because of this five pattern waveform. So I don't think I have a strong chart pattern analysis on GameStop. You can see there was this seemingly ugly double bottom come in with a handle, and it broke down. And if that busts, then the price can fall much further. I think that we had a big push up, we had a high and tight flag, a failure to rally, and now we've had some sideways action. And this is bad for the price because what it does is it creates levels of horizontal support and resistance. And if the price breaks down and below them, then it's going to take a lot more work to get up, out, and over them. So at the end of the day, I'm looking for GameStop to be confirming a triple top, actually. That's what I had on here, was a triple top. We had a high here, a high here, a high here, all at about the same level. And Bulkowski says you can short or enter into a short position, a put, whatever your style of taking advantage of lowering prices is. Once the price crosses this line, which is a trend line drawn from the bottom that starts triple top to the intermediate highs, or I should say lows, the peaks, the valleys. Jeez, I get so stuck on triple bottoms. I get the verbiage mixed up for triple tops. It's like, oh, we're in a bear market now. Flip it all upside down. And that would be a good entry. The price has fallen since then. So this really could just be the beginning of the downside starting in GameStop. And that would make sense if the markets are going to dump hard and swift. If the markets dump hard and swift, that's the most congruent thing I can think of. Now, moving into AMC, I have my Elliott waveform analysis pulled up here as well. I'm actually going to zoom into the 1 minute. And we'll take a look at what we see here. What's my time? 10 minutes already? You're kidding. Okay, so let me start over here. Wave 1 was short. Wave 2 took a whole day. Wave 3 subdivided and gave us a flag pull. 1, 2, 3, 4, 5. Flag pull. And then we had a flag form through here. And I'm just going to make this a flag with that yellow line. You can see the flag there. And this formed a nice A, B, and C correction, which is a 3-wave move down or a measured move down. And what happens after that is that wave 5 starts. I thought maybe wave 5 was super short and super truncated, but I'm thinking that because the low today came in line with the lows from yesterday, that the extent of wave 4 was actually much lower. I did say that the max lower retracement level for that wave would be 1256, and so to have that low come in today much closer to that level made me think that, yeah, this is all probably still wave 4. The whole ABC correction is wave 4, and now we start wave 5. And so I started charting my 5-wave motive waveform. Somebody went wave 1, 2, 3, and then this small pennant here at the end of the day is starting subminuet wave 4, and I like to show that in yellow. And I think that we're looking for 5, which is going to be an intermediate high. So push to high, a push to 5 would be to lead the price up towards 1475. And let me just do this. If wave 5 is proportional to wave 1, as it often is, so I'm just going to take that height, measuring it with my drawing here, and I'm going to say, hey, let's break out at that retracement level, the 61.8% retracement, and just add that. What do we get? We get a price target of around 445, and that's just below our 1445, and that's just below 1475, which would be the high I would expect at a truncated fifth. There's also a pivot point somewhere around here at 1450. I can just turn that on, actually. Let me just go add studies. Edit studies. I gotta get into editing. I might just not do as much editing today. Let's add that pivot points. Apply. Okay. Yeah, there you go. So resistance pivot point at 1454. That's right about where I'm thinking wave 5 will lead us before heading lower. And, you know, I'm wondering if the whole market's going to make that kind of a move. If the market's open and they're green and they start higher, but volume is weak and there isn't much there to support a rally, then I would expect a bearish reversal in the middle of the day and start heading lower. So basically, I don't know which way the markets are going to go tomorrow. I need a signal, a clear signal. I need either a dump below these key levels on SPY and IWM, or I need to see a rally start. But right now, it's just not totally clear, and that's okay. I'm not here to pretend like I know everything, because I don't, although I have been nailing the price action AMC for the last week, so that's been kind of fun. Anyway, I'm going to get into editing. Happy trading.